Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, yesterday we talked about how it was really looking like the lower band awaits for price. We did the upper band back here, little band ride around the middle of last month. We battled over the green line here, the middle Bollinger Band, for going on about a week. And yesterday was the first full day that we spent trading below the middle band. I was pleased. If you're a bear, you have to be pleased with how it traded yesterday. It pretty much traded the way we discussed yesterday morning. The bears didn't knock it down into some cataclysmic -2, -3% day where they typically get ahead of themselves and then, anybody with a mouse and a dream can just come in and just buy it. They, they held serve. They kept the majority of the trading below 40, or I'm sorry, below 50 in the 40s area, and they didn't close it on the lows, but they closed it in an area where it seems very, you can say very comfortably that the middle band has been converted to resistance, that the weekly pivot and the monthly pivot up in the 60s have been converted to resistance, and the onus is going to be on the bulls to break through those areas. Okay. The overnight high is 60, so we still haven't been able to violate monthly pivot and weekly pivot, which would be the gateway for another move back up to 71.75 to test that middle band. Now is where the job gets a little more difficult for the bears. They're going to have to push. They're going to have to push, and they're going to have to create a lower low versus yesterday's low down at 39, because the danger they run into is that this just looks like a test of the 50-day exponential moving average. And if that's all it is, then that's a likely, bounce target area, and you could see some bullish follow through. So it's an important day for the bears to continue to assert themselves. They don't have to dump it out. They just have to hold the 60 area and, in an ideal world, make a new low. The danger that they ran into yesterday is we bumped again and again on that 40 to 41 area. When they finally broke it, they did 39 and it bounced. What you needed to see there is you needed to see it break, and then you need to see 40 to 41 go resistance. That's your ideal bear case. And if that had happened, it's more likely we would be engaged with the lower Bollinger Band right now, and we'd be talking about whether or not we're about to go on a band ride versus just a band touch. Bears didn't get that done. So they've got to break that 39, do a lower low, hold in that area from above, and see if they can get to work on getting these bands to expand. The bands are tighter than they were yesterday. They're sub 3.5. If the bulls find their car keys and we head back up to the 71 area and the area of the middle band, you're going to see the bands get extremely tight again. And that will lend itself to a directional move later in the month. So there's a lot more questions than there are answers this morning. My suggestion is take it one trade at a time. Be mindful of the risk areas, the areas above and below that are important, and take it from there. All right, everybody have a fantastic day. Follow us at Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well.